Morning, everybody. Little damage being done. Well, things are becoming a little more certain. I would say that September is going to fulfill its historical predictive trouble coming here. Anyway, it's the beginning of the month, a long ways to go. But that crack in Apple yesterday was telling. We'll get to that, or Dan will get to that, but see where things are here, gapping down. Pretty significant gap down. Just cutting, looking at the cues here, cutting right down through the 50 MA. Buyers stepped up in front of it a little bit yesterday, as you could see, and entered the void. Held a little bit. Remember, we talked about these overlapping opens and closes here. This little baby shelf of congestion and minor support. We're looking at a few indices, and so now they're down in the middle of nowhere. So sometimes prices just, they might move a little bit higher at the open just because of the gap down. You've always got traders that fade gap downs thinking, they're going to get filled, but it might. But ultimately, whatever happens, this is where, let's say today, we would look at and say, this is where the most significant congestion area is. That could be a downside target. And I can't look. I'm looking to see if there's some data here. Well, there is for open interest. We're looking at the cues to see where there's some large open interest that could be a guide. Expiring in 8 days on the put side. 360 is huge, and look how it lines up. It usually lines up that way, where I don't know if it's going to go down there. Certainly, I don't believe it's going down there today, but just take note of that. And then there's 370, which prices right there. Right, that's the next biggest level of open interest. That is not expiring until for another 8 days, but something to consider. And 8 days. Just looking at what's going to expire. 370 today. I don't know how significant it is, but as far as what's expiring today, 370, which is where it's at right now, is the largest interest in open put options. So, somewhere in here should try and stabilize in the 20 MA. You can see where that is on the daily chart. All right. Spiders bounced off of the 20 yesterday and almost on that congestion area. So you got to pivot low on the hourly down there. And just I'm curious as I'm looking at this. From that high down to here. And ultimately I would think at 440, it probably would pierce through it initially. Sometimes they stop there exactly, but it doesn't have to. Almost 3% in a few days. So that's significant. And then we'll see how much it bounces from there, or the lack thereof. So again, looking at where this is at, right on these overlapping opens and closes right there. Remember the concept: overlapping opens and closes in a smaller time frame is going to be a base in the higher time frame. Overlapping bars or opens and closes are going to be a base in a smaller time frame, and there's a pivot. So, and considering the size of the drop, yesterday, today, we'll see if it holds. If it doesn't, well, that tells you how aggressive sellers are. But just looking at to the left there, that would be the spot. All right, spiders there. Where's our futures? And I got to fix this. SPX goes a second. And usually when they drop them like this, the put side is going to be the no-brainer if it's possible. And second here. Okay. So that doesn't look too bad, actually. When I look at it, 24-hour chart, not a gap down, the size of this pullback getting a little deep, but look, unless it gets out of hand today, you can see it's still dropping. I mean, the angle of retracement is pretty steep. So some stabilization in this area does make sense. And based on what we looked over to the left there, yeah, I'll pull this further over where this is at. Give or take, if it plunges a little further at the open, I would look at this level here. And then it's getting kind of deep, right? As it goes down, but it could form a bottoming tail bar. So we've got a relatively wide area. It's already below there, but look, somewhere in there is where they're gonna give it a shot. A little semi-climactic. So most of the time, when it goes vertical like that, and then it begins to stabilize, you get a little bounce, and then the retest pattern, maybe it makes a lower low. I imagine the NYSE tick at the open it could be like a minus 1,500, minus a 2,000. So we'll see. We'll just take it from there. All right, SPX. Those numbers were from yesterday. And today, let's see. $70. And if it keeps dropping, this 43.90 number may go a little bit lower. So this 4,400 strike is the biggest open interest in put options expiring next week. So it tends to put a floor under the market. This is underneath that strike. There's an unfilled gap here. So I use the term what are your lines of defense? So this little cluster right there, which we looked at on SPY, that little cluster of support. Then you've got this 4,400 strike with the largest open interest of puts. And then this 43.90 below it. So that's reasonable distance away, even though the size of the gap down, and what to protect it. And the call side, let's go back and look at this one more time, where this is at. Oh, way down there. Of yesterday. It's not above yesterday. Look, whatever, if this plunges a little bit further at the open, it's worth probably doing within the first 5 minutes. And then on a rally, we can assess that and see if the call side makes sense. Yeah. You just generally want to do these, even if you don't do them first thing in the morning. If the premiums are still there, you just wait for the market to make what could be intraday a significant turn. Plunging down to some support or into some resistance, and then look to do the spread on the move. All right. Let's review the futures. 20 MA there. It's something that might stall it. And look at how the vertical move to the downside. So when it gets climactic like that, usually you're close to some kind of stabilization. Doesn't mean that it's going to go up much, but stabilization. Russell Looks like it's got to touch the 200, holding up relatively well, considering. I mean, that had the plunges, but it's near this prior low. But, tomorrow being Friday, how these weekly bars look is going to be interesting, because if these things don't bounce much by tomorrow and they're red bars like this coming all the way down to the bottom of here, that suggests lower. And kind of, you can see a head and shoulders kind of a pattern. It's definitely like an upside shakeout. But yeah, we'll see. We'll see where this closes tomorrow. You can see that neckline, and you can kind of visualize it, right? Almost down to support. Weekly chart, starting to see the same things. There was the sell setup up there. Support is here. Q's already looked at. Bitcoin. So tech continues to hold up relatively well. Bitcoin's not doing anything. There's this gapping down to the 20. So all of the little underpinnings getting pulled out from under. And you can see this is sideways consolidation, but certainly looks like it's going to get more ugly. I don't see, what's going to save the day. Euro going down. It's almost at support. It's almost down here, which means the dollar's going up. What is the pound doing? Dropping. So firing on all cylinders, so to speak. And where did I put that? There we go. Up and higher. It broke out. I mean, I've said this a few times, but just to reiterate the news, they were calling for the demise of the dollar down here. I think it's going to go much lower. All the negativity, and here it is. It looks like it's going to just keep going up. And interest rates up a little bit. Well, now they're down a little bit. That's not doing anything. And gold in the middle of the trading range. I haven't looked at any of this, but daily charts that look like this, like if you look at GLD or I don't know if there'd be any premium here, but just pointing out a chart that looks like this, that's in a trading range where the moving averages are intersecting through the middle of the range and prices are holding there in a range this wide, you should be looking for a potential iron condor, selling call spread and a put spread. And ideally, the least amount of time to expiration. But, if we're going to create a slide showing what would be the chart to look for an iron condor, that would be it. And then look to see what kind of premium there is for it. Hey, McGraw, good to see you. You've been a little missing in action a little bit here. What's going on your record, but thanks. Good to see you back. All right. Crude oil a little extended there, breaking out. Things looking ugly, and, but, and I'll come back to it. I don't want to take too much time, but, remember not too long ago, especially in an MT Live, I think it was, we were reviewing, and I know in the letters, there are many monthly charts that are bottoming, and that's encouraging for that end of year rally. So whatever's going to happen in September and whatever culmination, if it plays out at the historical norms in October, it's going to set up an amazing opportunity because that's the way things typically are. And so adhere to your stops. Don't get beat up. Create a little smaller. Make sure you're around for the end of the year because, one thing that I remember, and then I'm going to hand it over to Dan. Years ago, I used to do private coaching in our office in White Plains, New York. And I don't remember his name, but he was a specialist on the New York Stock Exchange floor. And a lot of professionals, guys, market makers and so on would come for private coaching. They knew nothing about technical analysis. They knew order flow and so on. And one thing that stuck in my mind, you always want to learn something from someone like that, because I didn't come from this business knowing insiders, those kind of people. And like stock exchange specialist, to me, it was like, I heard this guy's coming for coaching and so on, and to learn. I'm like, and I'm going to look to pick this guy's brain. Who's going to get more out of this, me or him? But the only thing I got out of it, which was part of my assumption, was he said the majority of his year, he pretty much treads water. But at the end of the year, he makes his money for the whole year. Now we're talking 25 years ago, but it's probably still generally the same, because, there are points in time, different years like this, there was, a significant move, and then there was a lot of choppy stuff going on for months, but typically the end of the year, things follow through to the upside. So just keep it in mind that opportunities are coming regardless of what's happening right now. It's setting it up. All yours, Dan.
Good morning. Yeah, so Apple, Greg made that comment yesterday in the green room that it sure looks like institutions are falling out of love with Apple. And that if it continues lower, that's going to drag the other markets. And that's exactly what's happening here today. I said yesterday, if we open flat, then the 15-minute chart, we could trade up or down on whichever way it broke here. And obviously we see what's going on, gap down. And I love when they accelerate like this pre-market, as Greg was talking about, relative to selling a put spread. The lower the better. Look, it can't get 2 green bars in a row. So ideally, it'll just keep selling off. I would love down here another $3, get down to this 440, and then we'll be looking to sell a 0 DT put spread. Today is ideal environment for to do that. Paddle in the video short. Yeah, that was another heads up. Showing some weakness yesterday. And the problem, Pavel, is, I'm sure you see it, is you got a big old gap on your hands, gapping down over $15. So the answer is no. There's no setup now. And this obviously is, you never know what percent, of course, what percent of that $15 gap down is the broader market, is Apple, is people just taking money, is AI, because remember in the video, a big part of their run this year has been AI related, along with many other tech companies. So this was earnings. Let's jump right to earnings trades right now. Actually, I didn't do any. We review potential bullish and bearish patterns every day in the green room around 3 o'clock, and we talk about selling options, or if it's a directional buying options. I didn't do any this season. I'm sorry, this quarter. I keep track of all the official ones. We are 37 for 42 of selling options. So here, capping, it's a big gap down. I just didn't want to mess with the risk of AI period. So on this particular stock, so I did nothing. I have no bias here. I don't know what this thing's going to do. So we'll just come back to it. All right, thanks, Scott. Yeah, but 4 cents. Is that 4 cents is 4 cents? That means nothing. All right, here are my earnings trades. TT H, or wait, is it up higher here? Yeah, it's up higher here. I divide this into pre and post. All right, we just looked at that. Path did have a big gap up. Now it's flattened down a little bit. No pattern. The HPT, I didn't touch this. I said in the green room, this is a downtrend, daily, weekly, monthly. Now it could have got my attention if it were to gap up to 750 as a shock pattern. Now this is charge port or whatever. I'm not going to get into politics, but the very first thing I thought of when I saw this gap down and this trade, this trend, daily, weekly, monthly. You know what it is, Alex? You know me by now. It's here we come with more government bailouts. That's my, you know where my brain thinks. They feed all these companies, they're trying to go green, and what a disaster that's going to be. Oh, Greg, you should be in a good mood today because there were two good news items. Number one, Kamala says that she is capable and ready to serve as president if needed. And then Biden's commercials coming out tonight, they say that he has assured us that we are energy dependent now, based on his efforts. So that should put you in a really good mood today, those two comments of comfort. All right, so it's been in a crazy bullish move ever since this breakout, nothing to do with it. GME, this was one I was talking about selling a short strangle. I was going to sell the $25 calls. So remember the long discussion we had, Greg? There was more of a call skew than a put skew. So that nothing to do now though with it. Play. I'm getting whacked here. I would love for this to sell off more. Somewhere down here at 32.34. Next, this was an 7. That's a nasty gap. Now this was a potential really nice bottoming pattern setting up, and today's gap threw that right out the window. CXM gapping down. Far from the 20, it could be a call spread if there's any juice. Is that right? VRNT, downtrend, daily, weekly, monthly, and gapping down to 25. I don't know if this is a real company or not, but it's sure getting whacked. I'll keep an eye on it just because it's down so much. Inta, I don't see any gap. Sportsman's Warehouse, man, that's $1.50. $1.50 divided by 450 is what? 33%. That is a nasty gap. We'll come back to you. Yeah, these are all earnings, Patrick, that I'm going through right now. I don't see a gap. TTC, this I thought was up earlier. 80s. Okay, so this is going in. Wow. This is going into my category called excessive gap. And let's just see what happens in the first 30 minutes. Greg, this, we give this on YouTube and they can take notes and learn our bias and so on and so forth. But it's kind of like such a big tease because these beautiful trades that set up. And I say, we'll be watching them in the first 30 minutes. They don't get the benefit of what we do with them. SAIC, this is a beautiful 30-minute low short setup. So this I like a lot. 30-minute low.
Were you suggesting to leave YouTube running for the first 30 minutes?
Absolutely not. I'm suggesting post a link in there and make them spend $7 to get to get in.
All right, well, okay, they all said, Dan, send us $7 gift cards, we'll be there.
Well, I tell you what, if they could come visit me in Fort Lauderdale Beach at happy hour, I will do exactly that.
Okay, there you go.
All right, Wiley, this is Wiley Coyote, I think. Just gapping up here. Disney short watch. Yeah, that would be, you know, I always think of MT Lives, Thomas. That would be yesterday's session, how to get on board a moving train. It is bearish as can be, daily, weekly, monthly. But your home run entry was to take a half lot right there on that sell setup, closing breakdown. A beautiful entry. The only thing that could have made it more beautiful, or since McGraw's in the house, more better, is if one of these bars had a gap reversal or a bigger topping tail, and then I would have done a full lot. You know, so you're chasing a bit here, but 30-minute low for day trade. You got bearish all time frames. MEI gapping, that's a big gap though, nothing to do with it. GIII, that's a big upside gap. I personally don't like excessive gaps. I know they can work if you get a nice intraday pattern for afternoon day trade. That would be the limitation of me doing those. BSX alarm just went off. Let me see what this is. Ah, this was a pro gap, 100% retracement, and a buy setup with a 180. So doesn't this look fantastic? So I'm putting this in a window. Looks fantastic. Bravo Sierra X-ray. And I forget what the news was on that, but it is on my list over here. This is a death trend, no interest. That had earnings. TMP. Could be a day trade 30-minute low, but target not really big. All right, those are all the earnings. Disney low was 79. Yeah, but that means nothing to me in terms of a swing trade. But it is down a lot. Remember, we looked at the monthly the other day. KMB. And that's getting on board a moving train. Bearish daily, weekly, monthly. Marvel, I tweet somebody in YouTube actually gave this to us yesterday, and I said I liked it a lot. So if he took that trade, you know, today's Thursday, so the entry was yesterday under Tuesday's low, then you got a nice, beautiful home run